Gold Daily Forecast, December 28th, FXEmpire.com. Gold markets continued to slump on Tuesday as the economic situation pushes people towards the dollar overall. The stock markets did rise slightly for the session, but the optimism was tempered basically by the fact that volume is going to be very light between the holidays. The dollar strength is starting to weigh on the gold markets in general, and the end of the year meant that a lot of traders who had made quite a profit in this market over the course of the last 12 months were willing to take profits and step to the sidelines. The world economy is showing that it is slowing in many areas right now, and this suggests that the gold markets could see a hit for a little while. However, the market isn't one to sell for anything more than a scalper short-term trade. The uptrend has been far too strong over the last 10 years, and this pullback has simply been a blip on the chart if you look at the totality of the rally. Nonetheless, though, this market does have investors running currently. Most analysts believe that gold will get a bid in 2012 as the European Union will almost undoubtedly print more euros, and the Federal Reserve is likely to think about quantitative easing 3 if the problems in Europe have too great of an effect on the U.S. economy. These moves would almost certainly have people running back into the gold trade, and a move up from there could actually accelerate over the present speed that we've seen over the last 10 years as the market runs from both the dollar and the euro at the same time. Technically speaking, the $1,600 to $1,500 level still for us is one massive support zone. It would take a break of the $1,500 mark for us to consider anything more than a short-term scalp to the downside. In fact, currently we presently are flat of this market, just simply because we don't like selling into the support, and if we had to, it would be nothing more than a short-term trade. The market will be a screaming buy into the future, but we simply don't see the price action yet to suggest that we're there yet. Stay tuned to FXEmpire.com as we will most certainly point out when we get that supportive candle that suggests that the bulls will be back in control. Of course, we have to keep our eyes open and our minds flexible enough to realize that it could break down, and if it does, we will see that at the $1,500 mark. In the meantime, we are simply going to stay neutral in this market because of the ferocity of the rallies in the past. We don't want to be short.